how to profit from crash and burn stock victims. Believe it or not, we can realize near-term trading opportunities and longer-term value opportunities in properly chosen, depressed, if not outright, smash and burn victim stocks. I'm going to talk about how you identify these stocks. I'm going to give you a specific list of stocks and sectors that I'm looking at. And at the end of the show, I'm going to give you two main parameters that you must take into consideration before you buy any stock that's down and out. My name is Keith Richards. I'm President, Chief Portfolio Manager at ValueTrend Wealth Management. And this is the Smart Money Dumb Money Show. And remember, you're watching this show, so you're smart money. So let's talk about how we identify these depressed stocks and why they may in fact sell off some more coming into December and then have some sort of potential for rallying in the new year. Well, one of the reasons why some of these stocks go down further after having a very bad year or bad half a year is that portfolio managers and portfolio management firms, the big institutions, sometimes do what's called window dressing. And what that means is they don't want these lousy dogs to be showing up on their year-end statements that get sent out to clients. So what do? They sell their losers. It's called window dressing because they held on to the losers and lost the money, but they don't want you to see it. So that's called window dressing, and that can put further downside pressure on an already down stock. The second thing that can happen is what's called tax loss selling. So let's say you had a stock that lost a lot of money, but you also had shares of gold producers and technology stocks that made you a lot of money, and maybe you want to take some profits on some of those winning sectors. Well, you can offset the taxes on those profits by selling some of your losers. And by the way, you can still buy those stocks 30 days later in the new year if you still like them. So these pressures can push further downside on the depressed stocks, and the potential for them rallying can be increased, especially with tax loss sellers, because after that 30-day period is over, people can rebuy the same stocks without any negative consequences of taking the loss for tax purposes in the prior year. So that's one of the reasons why we keep our eye on the first quarter after tax loss selling. Some stocks will jump. Now, the other thing is that when these stocks sell off, whether it's from window dressing or tax loss selling, a lot of value investors will recognize that some of these stocks are now oversold and undervalued, and they'll step in. So these are the things we're going to be looking at as we go through our list of candidates today. So I'm going to start off with two specific sectors that have been oversold in 2025. And then after that, I'm going to give you a list of about half a dozen or so stocks that aren't necessarily in these sectors that have caught my eye. But I want to give you some ideas on how we identify some of the candidates to look for. And one of the two sectors that has been generally very sold in 2025 is the food and restaurant group. So let's take a look at some of the names. And I just wrote out some of the symbols. These aren't the only ones, but a lot of them you'll recognize, like Krispy Kreme and Wendy's and Chipotle. I was just at Chipotle yesterday, had a meal, Papa John's, Starbucks, Domino's, etc. So these are companies that on the whole in that group have suffered. Now, not everything in the group has suffered. If you look at the McDonald's chart, it's been rather sideways, but there's been a lot of strife in the restaurant group. So let's take a look at a group of those stocks put on a one-year chart. So I don't want to really concentrate on each individual chart here. I just want to give you a general picture that the restaurant group, some of the ones we were just talking about, Krispy Kreme, etc., have been, without question, over the past year, these are one-year charts, been in crash and burn cycles. Not so much Domino's, but you can see that Starbucks and all those are really, really suffering right now. So the point being is this is a group that if you feel there is an undervalued situation going on, you should be taking a look at. Another group that's really had its head handed to it on a platter has been the subprime lending companies, not to be confused with the major banks. So I'm not going to go over what each one of these stocks again is, only to suggest that the companies that are lending to, for car loans and to under credit rated individuals and for student loans and that kind of thing. I've covered them on some of my blogs lately. These are companies that have been under pressure, and you can see this on their charts. Once again, the subprime lenders and the small loan companies have been, generally speaking, under pressure in 2025. So there is some real case for bankruptcy here, just like with the restaurant companies. There's a real case that with a slowing economy, people aren't buying takeout food and whatnot so much, but there could be opportunities coming as these guys get washed out. Now, again, just like in the restaurant business, I referred to McDonald's having being relatively sideways in 2025. Well, in the subprime lending group, Bancorp Bank, for example, has actually been in an uptrend, is not really getting its head handed to it in 2025. But the majority of the group have had rough times in 25, and that's the thing I wanted to point out on this slide. Now let's take a look at a list of about 8 stocks that I either have been buying or am considering, no decisions, buying as depressed candidates, possibly looking for a pop. So I'm just going to cover what we own right now. One of them I've mentioned on the show before, Mosaic. We like the fertilizers. Now we own 2 fertilizers. This is the one that's gone down. The other one actually hasn't done badly at all, but Mosaic has been struggling. They just reported overnight. I'm recording this on the 5th of November, and funny enough, last night when I put these slides together yesterday, but you'll see on the chart, it doesn't show the pop that I saw overnight as their earnings came out positively. Nevertheless, it's still a pretty depressed stock, and I think there may be some catch up on that. The other one is First Service Corp. Now, First Service Corp is one of these companies that they're kind of a disaster relief firm. So ValueTrend has had some experience, actually, not willingly, with First Service in one of their divisions. Ontario had big ice problems in central Ontario. Our office is located in Barrie, Ontario, and what happened was our roof leaked water into our walls. First Service division came in and under the insurance company and fixed it all up, replaced our walls, insulation, repainted the whole bit. That's one of the things these guys do. They kind of work on individual cases through insurance, and they work on mass relief, such as the fires that we've seen across North America and other such problems. So that's what First Service does. They had a bad quarter. One of their divisions didn't perform that well. The stock fell, but frankly, this company has been around a long time and they know how to make acquisitions, and it was commanding a premium because it is probably the premium name in the group. And one bad quarter does not necessarily make a lifetime of bad performance. So we think it's maybe an opportunity right now. Now, again, it could be subject though to further tax loss selling as the year end comes, because it did take quite a hit, as we're going to see in the chart in a minute. The other ones are Dow Chemical, Core Resources, which is a stock that I have talked about on this video and in my blogs before. We don't own it, but they're in the coal business. Coal is going to be a substitute for the power needs as AI and what comes on until they can bridge the gap through nat gas and nuclear and that kind of thing. So it's a consideration. Salesforce has done poorly. The healthcare sector in general has done poorly. What I would do is tear it apart. Adobe. And another one that we actually own is Canadian Apartment REIT, and we'll take a look at that as well. It's been pretty depressed compared to the REITs. So let's take a look at the group, and I'm not going to plug any one of them. I'm just going to show you kind of the pattern as why I'm considering them. we do own Canadian Apartment REIT. You can see it's come right down to support right now. It's throughout the year, it's bounced off of around $38. Looks like it's there. I wouldn't be surprised to see it bounce. There's the healthcare sector. I've talked about this on a past video, and you can see that it had a neckline. It broke out, and that looks positively, but it's well under the beginning of the year prices. Same thing with Mosaic that I just talked about. Here's the gap and the drop, but it came right down to around old resistance, which becomes support. And funny enough, it's climbed a few bucks this morning, as I mentioned. So far, so good. And then Dow Chemical, which is still in a downtrend, but you can see it's attempting to base. So we'll talk about that later. Hey guys, sorry for interrupting the show. Just want to mention that next Wednesday, November 12th at 12 noon Eastern Standard Time, I'm on the BNN Market Caller show again. And this is the one time you can call in and ask me specific stock questions, whether I buy, hold, or sell them. This is the only time you can do that. So I do encourage you to call into the show next Wednesday and mention that you watch my videos or read my blogs. And if you do, I've instructed the producers to push you to the front of the line as best they can. I ask them to prioritize my readers and viewers. So, see you next Wednesday, 12 noon Eastern Standard Time. Back to the show. The next four I'll talk about are Salesforce, which again is also basing, and I really like stocks that base. If you can see that breakout, you've got lots of clean air ahead, and you can target considerably higher if that happens. Adobe, same thing. Adobe has been under pressure. It's one of the kind of underperforming tech stocks, but nice little base. If it breaks out, this could be significant. There's our coal natural resources. It made a really nice base, and then it broke out and it's pulled back. The question is that pullback just going back into the old consolidation, or is it just a test of the old base? We'll find out. I haven't bought it yet, but I'm interested in this stock. And finally, the stock I mentioned before, First Service. It's really been hit hard on that poor quarter, but one quarter doesn't necessarily make a long-term pattern, and it's come right down to its April washout lows from when Trump announced his tariffs. So, could be a bargain. We think it is. So as I promised, I'll finish up with a couple of rules to trade by, rules to follow when looking at these kind of candidates. Now remember, these stocks have gone down for a reason over the past year, and we want to be looking out to see if there's a reason to like the stock right now. Is it now at an extremely low value? I would say that First Service might be in that example because it did have a high premium price based on price to earnings and whatnot. That's come down. Might be good value on a company that's proven in the long term to be pretty good. Not endorsing the stock that you should buy it. I'm just saying that's our reasoning for owning it. There's got to be a fundamental. Would you buy Mosaic? Well, it's in a sector that maybe you like. I like the fertilizer sector for the longer term commodity play on it. So maybe Mosaic is turning the corner. So those are the kind of things you need to look at are the fundamentals there that will support the stock bouncing off from current prices. The second thing you need is the technicals to support the fundamentals. So you look for support. Remember, we just talked about base. So we look for a base and a breakout from that base. We look for a swing pattern. So you could be buying a stock that is trading between, $5 and $10. Well, maybe you're just looking for buying it at 5 and trading it up to 10. That can happen in these big swing pattern bases as well, if they're big enough to be profitable. And then you can look at the oversold indicators. So I often refer to on this show things like momentum indicators like MACD and RSI and all that stuff. Look at those, look at the volume, and you can put this all together between the fundamental reason for why you might think it's undervalued or at least too oversold, and technically why it might be breaking out and why this may be being bought by new value investors into the new year. The strategy is you buy during the December sell-off and then you look for a bounce into Q1 as if and when it happens. You got to do your homework on these stocks, but I think it's worth your time. I hope this video helped, and I'm going to encourage you to comment down below with stocks that you feel are depressed that are maybe good values. I'd be interested in hearing your intel on this. Let's make this a community event. So thanks for watching, and we'll see you next week. Hey, thanks for watching. I hope you got value out of this episode. Please like and subscribe below. We're trying to grow the channel, and it would really be doing us a big favor. I'm presenting ideas every week on trades that we're actually looking at ValueTrend. And by the way, I don't just talk the talk, I walk the walk. I have been a portfolio manager for 35 years. And in fact, I was one of the very early pioneers in technical analysis here in Canada. On my website, valuetrend.ca, you will see a link for our online trading course. And this course is a complete money management system. I do encourage you to take a good look at that and consider taking it. I priced it extremely low because I want retail investors, that's you, to take the course and get value out of it. It's literally my 30 plus years of experience put into one complete step-by-step course. And honestly, I wish that I had something like this when I was an early investor. It really will stop you from making so many mistakes. I also suggest you subscribe to our Never Miss an Opportunity program, which is our blog and our newsletter. There, you're going to get ongoing ideas, tons of charts, lots of trading ideas. And by the way, we never, ever solicit. We don't send you junk spam and stuff like that to try to get your business. It's for information, because part of my passion is to teach retail investors how to invest properly. I've been doing this, as I said, for 35 years, and I hope that I'm able to pass on some of the things that I've learned through this career as both a pioneer in technical analysis in Canada and a longtime portfolio manager. Thanks for watching. Don't forget, push like, push subscribe. See you next time.